Good morning, America. Hubert Johnson here. Or Good morning, America. Hubert Johnson here with Taxes Made Easy. That's our goal here, is to make taxes make sense and make it easy for you. Um, so today we're going to be talking about Social Security. It's a big thing, and it popped up in the news again. But one of the big questions that people have out there is my Social Security taxable? Easy answer, yes it is. Should it be taxable? That's another question that's being raised. But we're going to talk about how to be aware of if you need to be paying taxes on Social Security or not. And so it's kind of a scary thing. People can be living on the margins and not having a lot of money at all, but still be paying taxes on Social Security that they paid for, was taken out of their wages their whole lives. So again, it's a frustrating topic for many people. We'll try to make it as easy and clear as possible. Welcome back, everybody, and thank you for watching live or on rebroadcast. So we've got a lot of news today. I'm going to try to get through it fairly quickly because I do want to spend a lot of time talking about Social Security and how that affects your taxes. And again, a lot of people don't understand that it is taxable income. And the real question is, should it be, or should we make some changes? So I'm going to dive into this. First article, though, this actually came out yesterday. Let's go ahead and share this. This is an interesting article about, I just had it. Facebook, or Meta, paying a huge $1.4 billion settlement to Texas, the state of Texas. Texas sued them because they were saving the biometric data and selling it. So again, this is the crazy thing where online companies are using, face scans, finger scans, etc., to identify people. But then, not only are they using it and storing it. So unauthorized capture and use of personal biometric data of Facebook users, and they use facial recognition technology to do this to 20 million Texans without their permission. Again, this is not just happening in Texas; it's happening all over the place. But Texas is one that went and held their feet to the fire here. And so not only did they use this, let me see. So they passed a state law in 2009 to make it unlawful to use facial recognition software to capture and store data without lawful consent. Someone consents to it, fine, but they would use that to use tax suggestions. Again, it's scary part of Facebook online. You can be talking around the computer, I need this or that, and then all of a sudden you start getting ads for that. And here's the scary part: it was being exploited, and other entities it was being sent over to other entities who further exploited. So it didn't even stay with Facebook, and they're required to destroy biometric identifiers within a reasonable time, and they weren't doing that. So they're going to pay, per the terms of the settlement, they're going to pay this over 5 years. And so again, just because they're supposed to do this, it is really scary. I mean, on one hand, I really promote the irs.gov website. It's very handy, puts decision making and information directly in the hands of taxpayers, but it uses biometric data. And I don't trust the government to keep that information safe. Here, Facebook is openly sharing this information, and the IRS has a poor track record for maintaining their information and using it for partisan purposes. So again, under Obama, they did target conservatives. And again, it's kind of scary that they could be collecting biometric data on political opponents or going after people with biometric data. So again, not trying to put on a tinfoil hat here, but it is concerning when we have instances here of big tech saving biometric data and using it against their consumers. Speaking of that new technology, Tesla, I mean, this has been a big thing for Tesla. I mean, this EV sales have dropped off, but they're really making a big push for self-driving cars. And Elon Musk has really been pushing this idea that they're going to have self-driving taxis soon. So it was a Seattle area crash, killed a motorcyclist. Now, what this article is short on is details about the crash. What actually happened, and the investigation is still ongoing, so nobody's really saying anything. But apparently, he put the car in full self-driving mode, but they don't have. They're still supposed to have human supervision. They're still supposed to be able to, the drivers are still supposed to be paying attention, and the drivers are still responsible for what happens. So apparently there was a bang, either someone hit the car or something, and they ran over a motorcyclist that was in front of them. The motorcyclist being killed tragically as a result. So even though you're using the autopilot system, he looked at his cell phone while the Tesla was moving. And then there was the bang. So he said there was a bang, and then the vehicle lurched forward as it accelerated and collided with the motorcycle in front of him. So now the driver was arrested and being investigated for vehicular homicide, most likely manslaughter due to inattention. But again, this is, you can't just put your car in autopilot mode and have the distraction of a cell phone while moving. So again, it's a dangerous weapon. So, and the gentleman was dead, Jeffrey Nissen. So while this is a big thing for Tesla, a big thing for tech, human error is a big problem. Whatever the bang was, maybe he was hit, not sure, but he wasn't paying attention. So again, this is a very concerning thing. If you are in a moving vehicle, that cell phone needs to be out of your hands. You need to be paying full attention to this. I sound like a grandparent, but I have teenagers. So yes, it's very scary. And, again, Tesla came out and said that it's not fully self-driving. There's two partially automating driving systems. And at present, neither system can drive itself, and that human drivers must be ready to take control at any time due to an emergency. Human error, stuff happens, and you have to be fully alert. So while the future might be self-driving cars, we're not exactly there yet, and the operator is still responsible. So we finally have some good news for Boeing. Boeing has been on the news for all the wrong reasons. So they're getting rid of their CEO, Dave Calhoun, and they're hiring Ortberg. Who's Ortberg? Apparently he is the right person for the job. He's been he has 3 decades of experience running another company in the industry, very familiar with the process, but he's a Boeing outsider, so he's not. The idea is to bring him in to change the culture of Boeing, to get them back on track, and they're having some pretty nasty issues here. Sales are down 15%. There's a 15% drop in sales, but the company shows rose 2% after hiring Ortberg and announcing the news that he would be taking over. So fingers crossed he can turn around. What is it? It's a very well known, very important American company, and the leader in aerospace manufacturing. So again, I don't cheer the problems that Boeing has been having, and I hope they turn it around. So we'll see what happens. But again, that could be some very good news. I'm going to jump into student loans next. So we've got a couple articles here, both from the, well, this one's from the Epic Times, and the next one is also from the Epic Times. So kind of interesting. The courts have consistently ruled against Biden and the Biden administration when it comes to student loan debt relief. We're forgiving stones, we're wiping this out. He has no authority to do this. So the idea that the executive can just go and do whatever they want, we actually want guardrails. We want limits on executive power. And the sad truth is, we have one branch of government, Congress, that is not speaking. That is just, there's so much contention that, one side is usually happy to let the president, if it's their party, rule by executive fiat, and Congress doesn't speak. So now more and more it's going to the courts that are holding the president in check for overstepping his bounds. So again, the Congress really isn't doing their job, which is why the courts are acting as a check on executive power. And if it doesn't matter what side of the political aisle you're on, we do want the government to function the way it should. The problem is too many people are too impatient and they want action now. They want things to happen now. And so the political pressure builds, and to show that they're doing something, too often they do take actions that stretch the bounds of executive action and power. And this goes both ways. They're both trying to do what they can get away with. But again, another court he just announced new rules to make extended out to 30 million borrowers for student loans. And the crazy thing about student loans, most of these go to the wealthy. Most of these benefits go to those that come from wealthy families, wealthy situations, and the vast majority of non-college Americans and also poor Americans are paying for all of this. And the benefits mainly go to the wealthy. So it's really kind of upside down. It sounds good. It appeals to young people that are going through students. But really all it does is drive up costs. And it's not a magic bullet. So I actually didn't end up sharing that. So let me go ahead and share that article. And then, so first of all, Brown announces new rules to make student loans millions more eligible for student loan debt relief. So this is for a total of 30 million borrowers. I'm going to jump to the next article here. And federal appeals court blocks all remaining parts of the Save Student Debt Plan. So again, everything's been rejected that the courts have ruled on. It's all been held to be unconstitutional. But so far that has not stopped the Biden administration from going full speed ahead. We're going to have to continue this and wrap this up after our next break, which is coming up in just a few seconds. But again, we do want the rule of law. We do want some kind of sanity in our government, and this is not it. So we'll be right back. Welcome back, everybody. We've got so just wrapping this up with this court order. It just pretty much says the entire SAVE student debt relief plan is blocked, and if it wasn't blocked by an earlier court ruling, it now is. So it really is now we're um, waiting. So they're vowing to appeal the ruling blocking the student debt relief plan. Again, they're going to continue to fight. It might go all the way to the Supreme Court. The Supreme Court has already spoken on this, and the fact that the Biden administration keeps announcing additional student loan debt after it's gotten smacked down, after it's been denied. Again, it's frustrating because people are getting excited. Again, it's a way to say, look at me, I'm trying to do something to help you, but they're helping the wrong people. They're not helping the people that need the help the most, and it's adding to the debt, and it's adding to making it harder for everyday average Americans. So one good thing though, and I do want to give the Biden administration kudos where it's delivered, some great news being released. So Evan Gershkovich, who is a Wall Street journalist, is scheduled to be released as the biggest prisoner swap between the U.S. and Russia since the Cold War. Russia has gotten in this habit of grabbing Americans and holding them against, imprisoning them on fake, spurious charges and using that to get some of their worst actors out of jail. So again, I think it was last year or the year before, Brittany Griner, WNBA star, was traded for an arms dealer and trader, someone who has caused a lot of misery and throughout the entire world, as again, one of the worst guys out there. But I always want to celebrate Americans coming home. We don't have the details on what was actually given to Russia as part of this prisoner swap. It is kind of concerning that this is happening, but always thankful to have Americans coming home. And I want to give kudos to the Biden administration for negotiating this. So, again, there's other people that are being released here. This was facilitated by Turkey, and I guess to include 26 prisoners. 10 were sent to Russia, 13 to Germany, and 3 to the U.S. So Irvin Gershkovich, Paul Whelan, Ilya Rashin, and Vadim Krasikov and Enrico Krieger. Don't know all of those names, but again, every time we have Americans being released, that's a great thing. So again, here's another American with dual citizenship being released, and we also got Marine veteran Paul Whelan, which again, very happy to have Americans coming home. I think this is a great thing, and it should be recognized. Absolutely should be recognized. So, I'm going to jump to an article here. And I think I'm going to save. I have this article that I've been saving for a couple days, but I think we're just going to skip it because we're running out of time, and I just want to spend more time talking about Social Security. So, last article before we dive into Social Security here, again, talked about it yesterday. Senate is voting today on that major tax bill that we talked about. So again, this is both sides not being serious about this. This was first negotiated back in January, and within a very short amount of time, it started in January, the House approved it 357 to 70. So again, huge bipartisan support is put together by Ron Wyden, Oregon Democrat, and Jason Smith, a Missouri Republican. Good for them. They call it common sense, bipartisan, bicameral tax framework. They did it back in January, and passed it by huge margins. Just to give you an idea of this, on a normal day, you can't get 357 House members to agree to order a piece of apple pie. But that's how, the kind of bipartisan support that they had. But of course, it goes to the Senate, and the Senate is playing politics with it, and it's both sides. It's not one side or the other. So, of course, when it goes over to the Senate, it gets tinkered with, and again, this is something that will get passed. The question is, how soon will it get passed? So now that we are not in January or February anymore, but we're in August, 2 months out from 3 months out from an election, people are taking a different approach to this. And so, again, one of the big criticisms from the Republican Party said, look, we should have passed this months ago. They held on to it for 5 months. And now, right before a break, they bring it up to pass it just before an election. They're like, hold the phone. I think we can get a better deal after the election if things go our way. So now the Republicans are kind of put the brakes on it. They don't want to give President Biden a win. The Democrats have been playing funny games with this for 5 months. If they were serious about it, why didn't they do it back in February when it passed the House overwhelmingly? So again, this is both sides playing politics with it. It's not expected to pass. And that is a frustrating thing, is this is something that both parties agree that this should be addressed, that we should do something here to help people and attention. We talk about helping children now. There's been a lot of political backlash against J.D. Vance for saying, we need to help families out and help families with children. And that comes at the expense of single parents or parents without children or adults without children. But again, it has broad bipartisan support, but it's probably not going to pass because the politics on both sides that are being played here. So will we get this passed after the election? Very possibly. Will the GOP just help? I mean, if they win the election or flip some of the House, the Senate, they might do something more aggressive here. We don't know. We'll have to see. But again, I think it's recognized this needs to happen. It's just not going to happen right now. Instead of working with Republicans and getting this together, and got to give kudos for those in the House getting this done and moving things forward. But the crazy thing is, now it's being used as a campaigning tool and as a vote to make Republicans look bad instead of doing right by American kids. So, going to our last article here, and this is President Trump shooting from the hip again. And this is something I've said.
Fun. Let's go somewhere.
Why are Americans paying taxes on Social Security?
But first, let's get this fixed.
AAA.
It is a plan that people were forced into. It's not the best way of saving your money for retirement. By far, if you took that same amount of money and put it in the stock market, you would do so much better. It is very regressive in that it hits the poorest the most. So we're just going to take a dive into this. Many reasons why Social Security should be either revamped or made tax-free.
But the American people,
so I actually agree with this proposal. Again, it's going to cost more money, but really this is money being taken from the poorest in society.
Some of these statements have not been fully investigated.
So
he said, I can't defend why the roof was not better secured.
So this just happened, and it was just posted on True Social on Wednesday, yesterday. And he put on here, seniors should not pay tax on Social Security. And
why didn't we have those enhancements?
This is the first time this policy proposal has been floated, but kind of like the elimination on tips or taxes on tips. It's a new thing he hit out there. Who's really getting tips? Working individuals. It's not
and
you know,
protect them
it's
from that. Not only
not always the
protect them along
poorest. It's not
site,
people working at
but also be able
McDonald's,
to
but it's
protect them
also
against
it's people
potential
working in the
vehicles that
restaurant
identify
industry,
explosive
people
device. These are all common
working in
practices.
hotels,
Ron Rowe knows that
especially
because Ron
in
was on the president's detail.
casinos
And that
where there's
is the
service being
epitome of
provided,
the Secret Service. So he
and
knows that.
even
And
you
I'm
know the
just
funny thing is
wondering,
that
I
now
know he
they're
feels
asking for
bad
tips
about it,
everywhere you
but
go,
we failed that day. We didn't win
which
that day. I mean, the fact that the detail
you
didn't
can go
know
along with it or not.
that a
That's up to
gunman
you.
was on the roof and didn't know
But
there
if
was
you are
direct
truly
threat
giving
from the
tips for
president of
good
the United States,
service,
former President Trump, with
you know,
all of
again,
what was going
there's
on.
he's
Look,
already
he
put
was
out
the
there that tips
presumptive
shouldn't
nominee
be
of the Republican Party at the
taxed.
time.
So part
He
of
was the
this
adverse
is
intelligence director
removing
of the
taxes that
Islamic
affect
Republic
the
of Iran.
poorest,
It was an outdoor event,
which I think is the good
and we're
thing. So
talking
getting rid of
30
Social Security
30,000
taxes,
plus people there,
um,
and just didn't see the assets that should have been there for that type of an
and
event. And I'd like to know why. Why weren't those assets?
I just yesterday I was going through someone's financial information, and they were looking at, are they going to get taxed for their Social Security income? And that really where this came up is it was a state. So pulling up, and I'm going to share this tab. If you go to 2023 standard deduction is where I went. Well, first the 2023 tax brackets. So this true story, they just happened yesterday. They were making between husband and wife, both collecting Social Security, they were getting $3,100 a month. So $3,100 a month times 12 comes out to $37,000 a year. $3,100 a month is not much to live off of. So these are husband and wife. And so first of all, if you look at the tax rates, anything over $11,000 is taxable. So if you go back so these are the tax brackets, but when you go to 2023 deductions, what's the standard deduction? For 23, it was $27,700. So if someone's making $37,000 and they have their standard deduction is $20,700, I'm going to go ahead and subtract that out. So now that's just under $10,000 that someone owes, or that is taxable income for them. And that's just if they take the standard deduction, nothing else going on here. And then you divide that by 10%. That's $1,000 in taxes that they need to pay when they're earning $3,100 a month. So if you divide that out, you break that out, that's $80 a month in taxes, but $1,000 a month. Why are we taxing? And that again, if you're making more, these poor folk, they don't have a lot of income. They don't have much to speak of, and that's the thing. If you make it a little bit more, you get taxed more. So if you're making $45,000 and you have a little bit of Social Security because you paid more into the system, your taxes are just going to go up. And people could be paying $2,000 when they've paid into the system their whole life. So just kind of giving an overview of Social Security. It was established back in the 30s as an entitlement program, pretty much to force people to save and to make sure that people had something in retirement. Most people were not living far into retirement like they are today, which is one of the reasons that they're trying to cut back on it. But people have to rely on for Social Security for longer, and where there are some cost of living raises, it's not keeping up with inflation. And it's one of the biggest areas where I see poor people, really struggling to deal with these kinds of taxes. So if you are just relying on Social Security, you're going to be broke. Unless you have paid in, and unless you had a great job where you were paying into the system and paying a lot in throughout your working career, most people are getting, like I said, 2,000, 2,500 is kind of high. In this particular case, I think the husband was making getting 1,800, and his wife was making 1,300, getting 1,800, 1,300 a month from Social Security. These are the retirees living in a mobile home because they can't afford anything else, just squeaking by. So again, this is very, very scary, that the position that we're putting retirees in, and with the government overspending, inflation really driving that, I think it really does hurt people. And you talk about $80 a month, when you're on a fixed budget, that can hurt. That can hurt a lot. So when I go over people's finances, so this proposal of getting rid of Social Security taxes altogether would really help the lower income individuals and middle income, because if you are planning at all for your financial future, if you're just relying on Social Security, you're going to retire poor. You're going to live poor, and you're going to be struggling, which is very frustrating to see people retiring, having health issues, and they have to live with family. They have to make all kinds of concessions and not live the way they want to. They're just getting by, which is very frustrating. So if you don't have additional sources of income, you need to get something in place. If you're getting ready for retirement, I talk all the time. I was just talking to someone yesterday about selling a large asset and putting that in a retirement fund to help supplement their income. They're talking about selling their business, and we can protect that from the IRS. So just because you have Social Security, people ask all the time, can it be taxed? Can it be garnished? Yes, it can. They can take up to 15% of your Social Security, and the state can take their cut as well. I think it's 5 or 10% that the state can take. So again, these are just because it's Social Security. There's nothing. They can hit these funds, and if you have other source of funds, they can take 100% of it, and we've seen it and stopped it, where they were actually taking 100% of someone's Social Security funds if they had some other source of funding. If they were married to somebody, again, that's very frustrating. Something people have worked for their whole lives not only can get taxed, but can be seized by the U.S. government. So how do you protect your Social Security? It's actually one of the easiest things to protect, because they can't take all of it. But if you have a situation, it's talk to a tax professional, get the advice you need, because there's much that can be done to go and protect your case, protect your income as you prepare for and go into retirement. So this is why I had a financial planner on the other day. If you're approaching retirement age, even if you're in retirement, there are plenty of ways of adjusting your situation and helping you either avoid taxes or eliminate taxes and get you taken care of so you can live comfortably in retirement. So I see it all too often where people get to that point where they're getting ready to retire, and it's a struggle. So we're going to take a quick break here. And when we come back, we're going to dive more into this topic and how to protect your retirements, how to plan for the future, and prevent the IRS and or states from coming after your Social Security. So stay tuned. And again, if you have questions, you have someone that's stuck in this situation, give us a call, 520-485-7371. Or you can always look us up at guardiantaxlaw.com. And we'll be right back after this break. Welcome back, everybody. So again, talking about Social Security tax, we're going to kind of dive into the nuts and bolts of it. How much is taken out, and how does this hurt you? So as far as Social Security, um, it comes out between Social Security and Medicare. It comes out to 7.65 for Social Security and Medicare that comes out of your paycheck. Now, there is no buffer on this, which means there's the income tax rate. So when you pay an income tax, you get a deduction. So for the first 11,000 or 27,000 for the standard deduction, there's no taxes. After that point, yes, you start getting hit by taxes. So, for example, this couple that was paying into the system, and retired, they started collecting Social Security. They were only paying $1,000 on their income, but they're still paying, as long as they're working, they're still paying 15%. So you have a lot of people that go and work part-time, and they're still paying for Social Security. Now, the interesting part of it is the government being the government, they hide half of the cost of this. So again, what actually comes out of your paycheck is 7.65%. That's for Social Security and Medicare. If you're retired, doesn't matter. Any income you earn, you're still paying into the system. Any kind of income you make, which I think is once people are retired and drawing from the system that they paid into their whole life, why are they paying into the system when they're drawing on it? Doesn't make a lot of sense to me. But that would be a lot harder to address. So really, when you're looking at how much you pay in Social Security, you get the 7.65 that's taken directly out of your checks, and there's an employer portion. And this is what most people don't understand. The total amount is 14.9%, right around there. And that's the total amount of the cost of working. So if you go, they only take half of it directly from your check, but then they take the other half directly from the employer. So really, the total amount is 14.9%. That is not chump change. It adds up, and payroll taxes are one of the biggest liabilities and difficulties that employers have to deal with. They have to do the withholding, and then they have to pay the payroll taxes, and the employees only see half of the payroll taxes coming out. The employers have to pay the other half. Now, if you're self-employed, guess what? There's nobody paying the other half for you, so you get to pay the whole amount, 14.9%. So if someone, really this is a 15% tax on all income. And so it's an additional tax on there. If someone dies prematurely, they don't get a penny of it back. Again, a lot of this money we do, it is to fund our Social Security and Medicare, but again, it's about to, in the next few years, expect to be cut by 20% due to mismanagement and overspending by our federal government. Once the funds run out, they're going to run out, and then really it's just going to be whatever's being paid into it versus what's being drawn out of it, and the trust fund will be essentially exhausted. And neither party wants to touch this hot potato. So if you're out there working as a self-employed individual, 15% right off the top is it for Social Security. Now, that's on top of state taxes, federal taxes, local taxes. So if you're making decent money, let's say you're making $150,000 a year, and you fall on the tax rate, your overall tax rate is 20% for the federal government. Probably a little bit lower than that, to be fair. Let's say it's around, you have taxable of around 100,000, so let's say it's 12%. So if you have 100,000 divided by or multiplied by, so that's $12,000 in federal taxes, plus another, let's say 8% for state taxes. So that's $20,000. But there's no deduction, there's no standard deduction for Social Security Medicare. So for Social Security Medicare, it's based on the entire 150,000. That is another $22,500 in taxes. So somebody can be making a married individual, because these are married rates. If they're making 150,000 supporting a family, they're paying 40,000 in taxes, half of it being Social Security and Medicare. So they're not bringing home 150,000; they're bringing closer to 100,000. And to support a family in today's day and age, that's pretty difficult to do with the current mortgage rates. Young families go out there. You have to really be making between 100 and 150,000 to have to afford a home today, which is why it's so difficult for people to afford these. So the taxes really do hit the self-employed the hardest. They for regular wage employees, it still hurts you. It just means that there's less job opportunity. It's less likely that you'll get a raise. The cost is still out there. It's still being borne by employers. And they're the ones that make the hiring and firing decisions. They're the ones that have to bear that burden. But again, it affects your overall cost as an employee. Personally, I think the government should absolutely get rid of that and be forced to not hide the ball. But again, it's, people should see the real cost, what it's costing them, and that it's there's no deduction for it. So it starts the money, moment you start making money, you're paying into the system at a rate of 15%, money that you could either be paid in a wage or, so it's additional taxes that the government is hiding from the view of average W-2 workers. Now, does it ever end? Yes. You stop paying additional Social Security taxes when you hit 168,000 of taxable income. So at that point, the 50% stops because you're paying the maximum into the system. You're overpaying the system essentially at that point. And so if taxable income, so you paid on the first $168,000, not just tax, but any income, because you get taxed from on the first dollar that you make, you pay 15 cents per dollar to Social Security, Medicare. After that point, it stops. Why does it stop? Because you're getting zero benefit. It's supposed to be something to benefit people. And one of the proposals to help fix Social Security is to lift that cap and just tax people into oblivion, and continue that 15% tax, which would be a huge tax increase on the rich. Now, the poorer people, under 170,000, middle class, lower income families have to pay this 15% tax. But more and more, they're talking about cutting benefits for the wealthy. So it's supposed to be a plan where you pay into. You have your individual account at Social Security. This is why if you can't find your tax records or your income records going back 10 years, more than 10 years, Social Security usually has that information because they have to keep it on file to calculate what your Social Security payments should be. So again, it is a very regressive tax in that it hits the poorest the most, but at the same time, it's supposed to correspond to the benefits that someone receives. Once you get past that point, you still have to pay the 15% up to 168,000, but income that's earned beyond that, you're not paying the Social Security taxes, but your income tax rates go up dramatically. Right now, I think it's 32% is the highest, and then after that, it goes up. And then you add on state taxes on top of it, and you're still paying 45%, depending on what state you're looking at or living in. So again, the burden of taxes, of Social Security taxes, really does fall on people that are struggling the most. And the fact that people are struggling to make it, if you're barely making it, if you're bringing in $3,000 a month, you're not paying that much in, but again, you don't have much to pay in. But then when you add, if someone's making a little bit more, 4 to 5 thousand. So if someone's making 60,000 a year, we just do a quick calculation on that. And there are people between husband and wife. The husband might be bringing 3,000, the wife might be bringing in 2,000, especially if there were higher earners. But then you try to retire on that, and you subtract out the deduction. That's $32,000, and they're paying $3,200 a year in taxes on that. So again, if you that's a sizable chunk out of someone's pocket for something that they paid into and paid taxes on their whole life. So I think getting rid of Social Security taxes will help everybody get receiving Social Security. But I think it makes sense because it's a government program you were forced to pay into. You didn't get the benefit of the money for most of your life. And then when you finally retire, to have them tax what's already been taxed does smack me as unfair. And while it will have a small impact on the wealthier because it stops at some point and they're only getting so much Social Security when they do retire, their Social Security income is only a small portion of what their total income is in retirement because they'll have assets, they'll have distributions, etc. But the impact it can make for people struggling to get by can be huge. You put an extra $100 a month into some people's pocket. That's the difference between eating and being choosing between food and rent. If you have a married couple making $5,000, that's $300 a month that you're putting right back into their pocket. It can really make the difference for a lot of people. And again, a lot of people feel like they're being punished for being forced to save their whole lives only to pay taxes on their Social Security. So again, it's one of those things. There's all kinds of cuts to make, and President Trump is throwing out this tax cut, this tax cut. They all sound great, but unless they lead to real economic productivity, our biggest problem is, and the elephant in the room, is government spending. So and neither party is talking about spending. Why? Because cutting spending is unpopular. And it gives ammunition to your political rivals to attack you ad nauseum if you talk about cutting anything. So I think really what we need is for the American people to really get fed up. I mean, I think cutting Social Security is a great idea. I think there's other ways to cut taxes too. But it won't mean much if we have continued inflation, if we continue to spend like drunken sailors in our federal government. We can cut taxes now, but when the real consequences come and when our interest, like I said yesterday, I shared that our interest rates, just payments on that interest, not lowering our tax, our national debt at all, is 1.1 trillion a year, more than our national defense budget. So, and we're adding 2 trillion, around 2 trillion every single year. This last year was $1.9 trillion in additional spending. Those are the big issues. That's really what's going to drive us into insolvency. And even though we do short-term tax cuts, if long-term we have to jack up taxes like crazy and go through the same austerity measures that has happened to other countries globally, what's the point of short-term tax cuts when long-term it can hurt us even more? So again, that's really where I want to see some improvements, and that's how we're going to help people know what their expenses are, plan for the future, and prepare for retirement. So that way, when we do have our parents retiring, they're not retiring in the poorhouse, that they have confidence in their retirement plan and they can meet their normal bills. So it really kind of strikes home for me because we work with so many people that are struggling. And believe it or not, the IRS is going after retirees. They're going after everybody. They're rejecting offers for little old ladies just living on Social Security. And families, married couples that are retired. The IRS has made it harder, so much harder on everybody out there. It's unjust. It's unfair. So when I see President Trump say, hey, let's give some back, sounds great. But again, my bigger concern is the long-term implications and financial stability for average everyday Americans. So again, if you have questions, how do I save? How do I protect my money? They're coming after my Social Security. Give us a call, 520-485-7371, or reach out to us on our website. And you can find all these episodes at our website at guardiantaxlaw.com. Right on top, use the YouTube link and I'll take you right to these episodes. Again, thank you for watching again. And tomorrow's Friday. We're going to breathe, have a little bit more fun. And again, we'll see what the news brings us, but also continue to talk and hammer home on how to help people deal with the IRS, find that peace of mind through it, and again, make your tax situation a lot easier. Have a great day, and we'll see you tomorrow.